Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in your favorite company's financial reports. And today we're diving into a report that might make you think twice about how your money is being managed, especially when it comes to investment funds. Get ready because we're about to decode the latest filings from SanJac Alpha. And the details might just surprise you. Before we dive in, if you love getting the real scoop on what is happening behind the financial statements, make sure you are subscribed. And hey, we've got a fantastic community over on Discord to keep the conversation going. So join us there too, link in the description. All right, let's get straight into it. This document is a semi-annual shareholder report for SanJac Alpha ETFs, specifically covering their Core Plus Bond ETF and Low Duration ETF. It walks us through what happened from the 1st of June 2025 to the 30th of November 2025. First up, let's talk about money. How much did it cost to have your money in these funds? For a hypothetical investment of $10,000 in the SanJac Alpha Core Plus Bond ETF, the costs during this period were $33. That is about 0.65% of your investment. Now, for the SanJac Alpha Low Duration ETF with that same $10,000 investment, the costs were a bit lower, $18, which works out to 0.35%. This tells us that the Low Duration ETF is a bit cheaper to hold on to, which makes sense as it is designed to be less risky. Let's look at some key numbers for the Core Plus Bond ETF as of the 30th of November 2025. It had over $3 million in net assets and held 18 different investments. The net advisory fee paid was $5,732. The portfolio turnover rate, which is how often the fund buys and sells its holdings, was 24%. Over on the low duration ETF side, net assets were around $2.3 million with 13 holdings. The advisory fees here were much lower at $2,214. And get this, the portfolio turnover rate was 0%. This means they barely changed their investments during this period, which aligns with its goal of preserving capital and liquidity. Now, what exactly did these funds invest in for the Core Plus Bond ETF? A big chunk, 40%, was in US Treasury bills. Another 25.4% was in US Treasury securities and 21.6% in something called exchange-traded debt. They also had smaller portions in real estate investment trusts, both preferred and common stock, and a tiny bit in collateralized mortgage obligations, which are basically bundles of mortgages. Looking at the top issuers, it is no surprise that the US Treasury is pretty dominant, showing up multiple times. But we also see companies like PennyMac Mortgage Investment Trust, Chimera Investment Corp, and Babcock and Wilcox Enterprises Incorporated. For the low duration ETF, the focus is even more on the safe side. US Treasury securities made up 33.4%, US Treasury bills were 27.1%, and exchange-traded debt was 27.9%. Cash and other holdings accounted for 11.6%. Again, US Treasuries are front and center, but we also see PennyMac Mortgage Investment Trust and Babcock and Wilcox Enterprises incorporated in this list as well. It seems like these ETFs are indeed sticking to more conservative investments. Let's dig into the financial statements themselves. The statements of assets and liabilities give us a snapshot on the 30th of November 2025. For the Core Plus Bond ETF, net assets were just over $3 million. For the Low Duration ETF, it was about $2.3 million. These numbers represent the total value of everything, the funds owned minus their liabilities. When we look at the statements of operations, we see how the funds performed in terms of making money and covering expenses. The Core Plus Bond ETF generated about $49,000 in investment income and had expenses of around $5,700, leading to a net investment income of over $43,000. The Low Duration ETF brought in approximately $31,000 in investment income with expenses of about $2,200, resulting in a net investment income of almost $29,000. Both funds showed positive net investment income, which is good. The statements of changes in net assets show us how the net assets grew or shrank over time. For the Core Plus Bond ETF, from operations, net assets increased by over $64,000. They also had significant capital transactions, meaning new money came in through share sales, adding over $1.7 million. The Low Duration ETF saw a net increase from operations of about $37,000 and a huge inflow of over $1.7 million from capital transactions. This shows that these funds are definitely attracting new investors. Now for the juicy part, the financial highlights, this is where we see the per share performance. For the Core Plus Bond ETF, the net asset value per S-Share went from $25.07 at the beginning of the period to $25.39 at the end. Total return for the period was 3.62%. The low duration ETF saw its net asset value per S-hair tick up from $25.21 to $25.48, with a total return of 3.10% for the period. This return is definitely modest, which is expected for a low duration fund. Interestingly, the ratio of expenses to average net assets was the same for both funds at 0.65% for the Core Plus Bond ETF and 0.35% for the low duration ETF, matching those percentages we saw earlier. The portfolio turnover rate for the Core Plus Bond ETF was 24%, while for the low duration ETF it remained at a steady 0%. This confirms that the low duration ETF is truly holding its investments for the long haul, aiming for stability. Diving into the notes to financial statements, we get more context. Note 1 tells us these funds are part of manager-directed portfolios and have been operational since the 10th of September 2024. Note 2 outlines their accounting policies, including that securities are recorded at their estimated fair value. Federal income tax policies are standard, aiming to distribute taxable income to shareholders. Note 3 explains how they value their investments. They use a hierarchy of inputs, level 1 for quoted prices in active markets, level 2 for observable inputs like interest rates and yield curves, and level 3 for unobservable inputs. For the Core Plus Bond ETF, most of its investments fall into level 2, meaning their values are based on observable inputs, not just simple market prices. For instance, its US Treasury securities valued at over $772,000 are all level 2. Even its exchange-traded debt, valued at over $658,000, is largely level 1, meaning they are based on quoted prices in active markets. The low duration ETF also relies heavily on level 2 for its US Treasury securities, valued at over $765,000. However, a significant portion of its exchange-traded debt, worth nearly $540,000, is classified as level 1. This shows a slight difference in how each fund's portfolio is valued, with the low duration ETF having more holdings classified in the most liquid category. Note 4 details the investment advisory fees. The advisor SanJac Alpha LP charges an annual fee of 0.65% for the Core Plus Bond ETF and 0.35% for the low duration ETF. It also mentions that US Bancorp Fund Services, LLC, acts as the administrator and fund accountant, and US Bankinar is the custodian. This shows a tight relationship between the investment manager and service providers, which is common but always worth noting. Looking at securities transactions in Note 5, the Core Plus Bond ETF made significant purchases and sales of securities, totaling $833,000 in purchases and $340,000 in sales, excluding government securities. The low duration ETF, however, only shows purchases of $537,000 and no sales of non-government securities, truly sticking to its hands-off strategy. Note 6 explains the creation and redemption of shares, which are done in aggregations called creation units, typically by large institutional investors. This is standard for ETFs. Note 7 provides a look at tax components. As of May 31, 2025, both funds had undistributed ordinary income, with the Core Plus Bond ETF having about $15,000 and the low duration ETF having around $5,000. They also had some accumulated losses, but nothing that seems alarming like a massive tax liability. The distributions paid out were primarily classified as ordinary income. Finally, Note 9 states that the funds operate as single-segment entities, and their performance is monitored by portfolio managers Andrew Wells and Andrew Vladico. So, what is the story here? Well, the SanJac Alpha ETFs, both the Core Plus Bond and the low duration versions, are operating exactly as they are designed. They are low cost-conservative bond funds. The low duration ETF, with its zero portfolio turnover and focus on treasuries and similar safe assets, is a picture of stability. It is not trying to make you rich quick, but to preserve your capital. The Core Plus Bond ETF is a bit more active, with a higher turnover rate and a slightly broader range of investments, including some corporate debt and REITs. However, it still maintains a strong allocation to US treasuries, indicating a primary focus on safety. The costs are reasonable, especially for the low duration ETF, aligning with the typical expense ratios for these types of investments. The funds are attracting new money, which is a positive sign of investor confidence, though the scale of assets is still relatively modest compared to giants in the industry. The main takeaway is that these funds are fulfilling their stated objectives. If you are looking for aggressive growth, these are not your funds. But if you want a steady hand and a focus on capital preservation with low fees, SanJac Alpha funds seem to be delivering on that promise. The fact that they predominantly hold US treasuries and the low duration ETF has zero turnover is a strong signal of their conservative strategy and should provide a sense of security for investors. Alright, that is our breakdown of SanJac Alpha's latest shareholder report. What is your take on these conservative strategies and what they signal for the company's future? Are you a fan of low turnover and US treasuries? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate finance. And don't forget to check out our Discord community in the description for more discussions. Thanks for watching, see you next time.